Good morning, ladies and gentlemen, and welcome to the show on this Tuesday, the 27th of April, 2021. Thank you for tuning in. Now, yesterday I was talking about how the Fed is going to feel forced to do something to try to quell off inflation. They get very limited tools as far as fighting inflation is concerned. I mean, they've got the most powerful tool in the book to fight deflation, but they get very limited tools to fight inflation with. And one of their biggest tools is raising interest rates and what's called tightening. Now, what could force them into action to start the tightening process? Well, Bitcoin puts pressure on them. Granted, when Bitcoin goes up and up, it doesn't look good for the dollar when Bitcoin goes up. But I don't think Bitcoin is the real catalyst that they have to worry about. I'll tell you, let's get right in there and let's open up the charts right here and take a look. Here's your catalyst right here. Gold and silver. If the gold price goes over $2,000 and the silver price goes over $30 in a fairly short period of time, that'll act as a catalyst. They'll feel like they have to do something because it shines directly on the dollar. Basically what it means is we're going into the front side of heavy, real heavy inflation. Investors will start to get worried about the purchasing power of their dollars. Right now it's completely divided. You got half of your investor community out there thinking that this thing's going to go into deflation. And they're thinking be in dollars. They're thinking that's the place to be. The other side of the coin is you got your inflationists who believe that this whole thing is going to erupt in a massive inflation and that you have to get in alternatives to the dollar. So that both of these lines of thinking are basically of a system that's gone unstable. We have an unstable system here, financial system. And this can act as a catalyst right here. Gold and silver. It looks to me, right now, today, watching the charts, it looks to me like silver might be starting to try to make a breakout to the upside. We're up 16 cents on the day so far. Gold today is only up 40 cents, 17.81. But, I'm going to tell you, gold and silver have been suppressed for so long. Now, what'll happen if the Fed goes and they do that? Say 90 days from now, 3 months from now, or 4 months from now. The gold and silver price of gold's went up above $2,000. Silver's went up above $30 again. Right? Say 3 months from now. And the Fed decides they're going to tighten out of the blue. Well, the market's going to take an awful tumble. And, there's, like I say, there's these two deflationary forces and inflationary forces on the system right now. We've got 50% of the people believing it's going to be deflation. So let's explore that option. Guys, let's explore that option. What if it goes deflation? So the Fed's sitting back and they're watching. Well, it's true what these guys are saying. We could have 80%. We could lose. The stock market could fall by 80%. So the Fed's sitting back there watching. Stock market falls 10%. Oh, we're not too worried yet. 15%, 20%, 25%, 30%, 35%, 40%, 45%. At what point do they save the system? Because you got to save the system, because if it goes, the stock market falls more than 50%, everything's going to start to cascade down in failure. And if the bond market starts to tumble too, if it all starts to tumble into deflation in the bond market's been in a bubble for 30 years. So, at what point do they save it? They'd have to save it, guys. Otherwise, the whole system would completely stop. It would freeze at a certain point. So if they do decide to tighten, and I think they might as a move of desperation if they see the gold and silver price start to break free, in hopes that they're going to bring the system, restabilize the system, do a small tightening, and they might try something really small like 25 basis points. They're going to have to step in at a certain point and stop it. So they're going to have to undo what they just did. But every time the everything bubble falls by 5%, 5% more, 5% more, and starts to crash, it's going to take that much money to pull the whole thing back again. You know? So that's the situation. It can't go the deflationary route because it just won't stop. It'll just keep falling, the whole thing. Because the credit bubble is so big, the leverage is so great, that if we actually do have a deleveraging situation, you can't let it complete the process. It would completely destroy the system. It would go beyond what the system can tolerate. So knowing that, then everything else, when you keep that in the back of your mind, then everything else that they're trying to do is all a game of silly beggars. This whole thing about if they were to step in and try to do any form of tightening whatsoever, they have to stay the course. And they can jawbone about tightening and everything. Do I think that they'll actually do it? Yeah, I think they're going to. I think they're going to get desperate at a certain point when inflation starts to really rear its ugly head in a couple more months. I think it's going to be the biggest mistake they ever made to try to tighten in this environment with such an over-leveraged system. I mean, look, the last time they tried quantitative tightening, going back, they were able to. They started to blow up the system. They had to stop. That's when we saw you remember the big repo crisis? That was just the beginning. The system started to blow up. This is a situation where we've got only two options left, guys. Two options. One option is they let the deflation come and they let the system basically break. That would be unimaginable. Because the system would basically, everything would just stop. You put your ear out to the freeway, and you wouldn't hear the trucks running anymore. You wouldn't hear the trains going up and down the tracks anymore. That's what a deflation would do. It would melt the system down. The system that we've built over thousands of years would basically just freeze and stop because everybody is over leveraged. All these companies and the I could go on and on. I could list all of it. The derivatives markets and all of these zombie companies all around the world and everything. Everything would just basically, money would just disappear. And there's a reason for this. It's because when they create money, they create it in the form of a loan. In other words, it's debt. And debt becomes credit. So what happens is when they create these dollars, these digital dollars, right? There's a debt attached to them. It's minuscule, but it's what's called, it's accumulating debt. It's what's called what's the name for that when a debt accumulates, when interest accrues? It's accruing interest, right? In other words, interest piled on top of interest. But when they create the money, they don't create the interest. So, in other words, if $1 is loaned into existence, and say there's 1% interest attached to that, they created the dollar, but they didn't create the 1%, the 1 penny that they needed to pay the interest for that particular year. Now, when you spread this out over 100 years, what you get is if they ever try to pay the debt back, they didn't create the dollars to pay the debt back. So in a deflation, what happens is everything is all this leverage starts to come due. It's like a margin call, an enormous margin call. And in fact, that's what it actually turns into, a deflation. It turns into a giant margin call. All the money just disappears. Poof. So you got these guys out there, and they're saying to themselves, gee, I'm going to hoard dollars, because if all the money's going to disappear, and I'm the only guy that still got some money, I'll be able to buy everything on the cheap. I'll be able to buy that business over there for 50 cents if it's marked to market, you know? But the problem with all this is, and what they don't realize is if our society were to freeze because of that, because all the money were to evaporate and just disappear, and everything just freezes, you can't buy anything, because all that would happen is chaos would break out. Everything would stop. These deflationist people out there who believe this philosophy, that everything's going to go into a deflation and the market's going to fall by 80% and everything. How do we do that without the system just stopping? Everything, if a company goes bankrupt, they're not going to continue to deliver bread. They get a big sign on the door and everybody has to go home. Because they're completely bankrupt, because the system is broke. Completely broke is what I'm talking about. That's what deflation would do. And that's why we can't go there. So the only other route, the only other way to go, is the way we're going. Keep printing, and what they call printing, and what they're creating is these currency units. Keep creating more and more and more currency units to keep the system running, and keep inflating this bubble bigger and bigger and bigger. We've passed the point of no return. That was back in 2008. That was the point of no return. And when we built a system out in 2008, we created this Frankenstein monster that needs to be fed. If you stop feeding him, the system stops. So they have to keep going. And you say, well, what about what you said yesterday, Glenn? You said that they're gonna try to tighten. Yeah, they'll try it on. Let them try. Come on, boys. Come on. Give it a try. Go ahead, give it a try. It's just going to cost you more on the other end when the system starts to deflate and it becomes uncontrollable, and then you have to dump all that extra money in, all those extra currency units, just to bring it up to some sort of stability again. Because then you get scared of what you did. You know? It's like dropping a match into a barn full of hay. It's when you see the barn starting to go up, you say, okay, extinguish it, extinguish it. You know, maybe you can extinguish it, but it's going to take a hell of a lot of fire foam. You know, don't drop the match in there to begin with. Don't get it started. Just stay the course, guys. This is what I'm saying to the Fed, that they should do, is stay the course. Don't try to tighten into this environment. It just ain't going to work. Everything's going to start to deflate. So what happens if they stay the course? What happens if they continue on creating all these currency units into the system? Well, the inflation is going to slowly go from moderate to extreme over a period of maybe a couple years. And what's going to happen is we're going to suffer what I call a partial system breakdown. It's not like what deflation would do. Deflation would wipe the system right out, would completely melt down and stop. This is going to be different. This is going to be a situation where it's slower. It's much slower when you inflate. It's going to be much slower. It's going to take several years to play out of a hyperinflation area. And people will continue to use the currency units, even though they're hyperinflating. They'll just have to use a lot more of them. If they're going to use cash, they'll have to take a whole big bag full of cash, wads of it, to buy a loaf of bread. You know, it just gets worse and worse. But they continue to use those currency units while the government's sitting there thinking, well, what are we going to do? We got to do something. The currency's losing 50% of its value daily. We got to have some sort of a reset or something. It's just a mess, but it leads to a partial system breakdown where The crime rate goes up. Way up. Food prices go through the roof. People can't afford them. It's a time when revolutions become more likely. Civil unrest become far more likely. It's a very desperate period that you go through where the world goes through a hyperinflation. And the governments, in the end, they have to have some sort of new Bretton Woods. They have to have some sort of a new system that they have to establish where they have to go back to hard money. They're forced to. They got no other choice. If they try to release some new currency that's not backed by anything, it'll suffer the same fate. And what this leads to is, in the general population of the entire world, a distrust of fiat currencies. So where are they going to put their faith? They're going to put them, they will all, the world will put their faith in hard money again. In other words, what I'm trying to say is we're going back to hard money in the next 5 years. And what's that going to do to the value of hard money? Well, when all of this paper menagerie that they've created has crumbled to dust, then the value of hard money is going to go exceedingly high. Because it's all limited in supply. Gold is limited in supply, silver's limited in supply, and so is cryptos, the good cryptos, like Bitcoin. Okay, yeah, they've made this argument over and over again that they can make as much Bitcoin as they want, but they're not Bitcoin. They're things like Bitcoin Plus or Bitcoin this or Bitcoin that. They have the name Bitcoin, but they're not the original. The original is the one that's at 50,000 or whatever, That's the original Bitcoin. You can't create the original Bitcoin again. The original Bitcoin is a very scarce. There's only 21 million in existence, and that's all there will ever be. Gold, same deal. Goes limited supplies in the world, However many thousands of however many tons, how many thousands of tons they have, that's it. It's limited. A lot of work to get it out of the ground. Same thing with silver. So that's what we're going back to. Anyway, let's move on with the show. We're looking at cryptos today going up. It's 2049 billion. The Bitcoin price of 54,954. Wow, guys, that was a real rant. Dow Jones Industrial Average. It's down 18 points at 33,963. The Dow Jones is and the markets right now are kind of exhausted. They're not falling, but they're a little bit exhausted right now. It's like a runner in a race who's ran a long way up a big long hill, and he's bent over now, and he's breathing really heavy. That's what the market's doing right now. Let's take a look now at crude oil, 62.36, going along at 45 cents up today, or 0.73%. Now the MOVE index, 60.98. So everything looks pretty stable in the markets right now. Prices and everything. Bond rates are going up a little bit. 1.4 basis points on the 10-year, 1.56. And 2.25 on the 30-year. It's up 1.3 basis points. Now we're going to take a look at the dollar, and the dollar is going along sideways at 90.90. So you guys get your choice. You can believe the deflationists out there, and they're right. The system's ready to deflate. It's never been more ready to deflate. But the big problem, the big fly in the ointment is the system cannot be allowed to deflate, or it'll stop. And when I mean stop, I mean exactly what I said. The whole thing would just freeze up. It runs on money. You withdraw the money. It should be a no-brainer. Your car runs on gas. What happens if you cut the fuel line? Is your car going to continue to run? Okay? So you can't go there. That's that road, that deflation road. Can't go there because the system won't function. Inflation, the system will continue to function on currency units that are worth less and less and less. But that's going to cause problems at a certain point, you know? So either way we go, we're in for problems, but we're in for more problems if we deflate than if we inflate. If we inflate, most of us will probably make it through it. It's going to be rough, but most of us will probably make it through. But if we deflate, I'm not even going to say what's going to happen to most of us. You can just imagine it in your mind what would happen if the system actually stops for, I don't know, maybe forever. Maybe who's going to get it running again once it completely stops and chaos breaks out everywhere? You can just imagine that in your mind, but that ain't going to happen, guys. If it does happen, well, let's hope it doesn't happen. But I don't think it's going to happen. I only give it a very, very, there is a percent chance it could happen, but a very, very small percent chance. Anyway, thank you guys for listening to the show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.